Hi, Adrian Manyathelo here. Today is a really wonderful day. Anytime you see me coming out with my whiteboard, you must realize something good is coming up, right? So today I just want us to really understand, right, how to read an income statement and a balance sheet, okay? Now, these things are quite easy to understand, right? But the only problem that comes is really the details of it, right? Because the day you don't understand these things, the day you won't understand business at all, right? So this is very good for business people, for business owners, especially if you are new, and especially if actually even some people that have been in business for many years, they never do this, and this is crucial for their business. Now, when you go into a business, right? And in this case, I'm just going to talk mostly. What I'm talking about here is the MLM, online business, those kind of businesses, right? Which are quite the investment you put in that is cheaper than what you do. For example, if you are going to do uh, run a McDonald's franchise, it will be far much more expensive than this, right? This is probably one of the biggest amounts maybe you'd pay for any online business upfront, just to buy literally every product, right? Now, immediately you buy that thing, right, for $6,000, for example, right? What happens is that that money that you've paid in, or that thing becomes either an asset or a liability. It only becomes a liability for the reasons that I'll cover here, right? So this 6,000 could be here or there, could be under asset or liabilities, right? These liabilities, by the way, my thing just, the word doesn't fit in properly there. Now, what determines is whether to become a liability or an asset. An asset is something that puts money in your pocket. A liability is something that takes money out of your pocket. So what you do is you make sure that your business in general, because once you've paid for your asset, sometimes this money here, there's the money you pay upfront for a product. Some products you buy them once and sell them forever. Those are excellent ones, right? You buy them for $1,000, and then maybe you sell them for $1,000 for years and years, because maybe it's information technology, depending on what you are doing, right? So then what you do is you look at your expenses. Now, this is a I didn't explain this. This is called an income statement, right? And this is called a balance sheet, right? Now, when it comes to the income statement, right? First thing, you got to look at the things that you're going to be paid for, maybe on a monthly basis, right? And let's say you pay for your education, you pay some amount, maybe $300. I don't know how much you'd pay for that. Okay, let's say it's $300 you're paying for your education, learning some more stuff, some skill, developing your skills, because this thing is about skills. The more skills you have, the more money you make. As much, the more you increase your skill set increases, the more money you make, basically, right? And the other things you'll be paying is your bills, like what, electricity, phone, whatever it may be. You put them there, okay? And then the other thing that you'd pay, of course, is tax. If the government asks for tax, some kind of tax, you put it there, okay? There'll be more other stuff probably you are paying, right? Whatever it is here, let's say altogether here, let me just make a total here. Let me just do a total. Let's say the total here is, I would say maybe 400, maybe $400. Let's just make it $400 total, right? It's $400, right? What you need then to do is the money that you go out there and make, whether you are marketing your products, or maybe sometimes when you are starting, you go to supplement this. Remember, you go to supplement this. One of the tips that will give you is you first of all sell your products, sell products. Whatever you make out of your product, let's say you make, I don't know how much you make, whatever you make there, you put the amount, and then the other thing that you do is you supplement it at the beginning. That's just at the beginning. Supplement it. For example, that means if you have a job, keep that job, right? Because the job will bring in income, right? As long as it's targeted, its aim is to cover the business side of things. You supplement that. So that means your total supplement here should be more than, let's just put the total here, right? Your supplement here should be more than 400 for it to become an asset, for your business to change to become an asset, right? It should be more than 400. Let's say 500. Let's make it 500 so we work on figures, right? Or better still, $600. Okay, let's say you make $600. Your income, your total income is $600, and after paying off everything here, you are left with, of course, $200, right? Then your $200, let's say minus, let's do it down here. Let's say $600. $600 minus $400, right? 400, it gives us equal to $200. As long as your business works like that, as long as you are making a profit here, that means that's an asset. That 200 here gives you profit. That means you think you can easily move this, whatever business you're using here. Maybe it would have been better to write the name of the business here instead of putting their money there. Let's say ABC, right? Your company called ABC, right? Then if it's like that, then it's an asset. But if you are making your total amount you are making is 400, for example, right? That means, let's say 200. That means you are losing out 200. That means it's a liability. Then ABC moves up to here to be a liability. Okay, that's how to read an income statement. Just as simple as that. And this helps you to understand whether what you are doing is making money for you or is not making money for you. Because as long as it's making money, the advantage of doing this is that as long as it's making this 200, there will be a day when you will actually pay off the $6,000 that you paid at the beginning, right? That means the thing is bringing money for you. And the more product you sell and the more skilled you become, obviously you then outbid the investment money that you put in, which means the thing is in profit for you, right? And becomes a real asset. That's how you tell you are the one that's in control. This thing tells you that you are the one that's in control of your business. You are the one that determines whether it becomes an asset or a liability, right? But the other most important thing is this thing supplement. A lot of people they ignore this, right? They will take a business, right, where it's making. Let me give you just an example of an offline business. Let's suppose that your grandma gives you a plot of land, and suddenly you realize that there's actually gold in that plot of land. What you need to do then is you would need to find, first of all, to hire somebody to come and help you. And you're going to pay that person, right? You're going to pay for the machinery, you're going to pay for everything. So at the beginning, you are going to have to borrow a lot of money, right, to invest into the business, right? But once the business starts running, then you get profit that covers up for the initial amount that you paid. That's exactly how this thing works, okay? I hope that's been clear for you. Make sure you click on that link below this video or ask for a link from me where literally I'm just going to I'm giving you away, number one, I'm giving a traffic source PDF, and also you'll be able to see my life plan, which helps me out to do these kind of things here. And also you'll be able to see my community, and please make sure you say hi to them. Thank you so much, and bye for now.